So, Terry, it's Monday night. I dare not ask how your week's been so far, but are you looking forward to the week ahead?
I am, and just firstly, I do, Chris. I do remember our original first meeting, and it's great to be able to kind of work with you again now. We're on this new platform and this new sort of stage in your evolution and what you're doing. So it's great. So, like I say, thank you for having us kind of join and be a partner with you. That's wonderful for us. Um, yeah, no, I am looking forward. I was off for a few days last week, getting a bit of rest, and so back this week, fully charged and looking forward to really kind of the whole year ahead, actually, because as you mentioned, Shawbrook, we're sort of in our ninth year of doing development finance, and it's the part of lending I enjoy the most. I used to be a relationship manager back in the day for one of my previous places, and I've always loved development finance as a type of lending. And Shawbrook have a really good appetite for it, and we came off the back of a very successful year last year, and we're really looking forward to the opportunity to kind of grow on that for this year. So we're hopefully we've got some good stuff coming through, and we're looking forward to it. So yeah.
Yeah, it's very exciting. And you were kind enough to invite me down to your new offices.
Yes.
So yeah, obviously I was a couple of floors above you, and then um, I walked into the new office, and it was like something out of Star Wars. It's quite an impressive office that you guys have got. So it's been a bit of a journey you've been on in the last couple of years in terms of the level of growth and support you're giving to customers.
Yeah, I mean, the office is definitely a sign of how committed Shawbrook are as not just in development finance, but across all of our products, and committed to the staff and providing them a really good place to work, where you're not kind of sitting there having to put jumpers on because the air conditioning isn't working or the hot water's not coming out so you can't get yourself a cup of tea. They've really invested to kind of make it a really good place for the team to work so they can kind of be productive, and also kind of, and I'm a big believer in this, sort of encouraging people to come back to the office, because actually it is nice when you're sitting with your team and you can have a bit of fun and a bit of banter with them. You lose that when you're kind of stuck working from home, and you can kind of just feel like that's all you're sort of looking at is that screen and sort of and looking at data and whatnot. But when you're in the office and amongst people, that kind of can break it up, and actually you remember that it's not just a place you go and work; it's a place you can actually build on good relationships, strong relationships with the team there as well. So that Shawbrook have just continued to commit to providing a really good place to work for its team, and we're all very grateful for that at Shawbrook.
Yeah, it's very impressive, and I'm very excited to see what the next 12 months are going to hold. But Terry, what I like to do with these sessions is I like to take it right back to the start of your career, how you first got into property, how you first got into development finance, and give our audience a bit of context in terms of how you are sitting with us today as managing director of development finance and sort of the journey you've been on.
Yeah, no, for sure. So I mean, I hate to admit this, but I've been in banking now for about 30 years. And and if it doesn't look that way, it's just because there's a really good filter on this screen that's making me look like I've had 30 years. Um, but my career started over at NatWest, when I was younger, and sort of working through the ranks there. But at NatWest, I very quickly became an assistant to a relationship manager, which the roles there. And that relationship manager mainly did property investment and property development. And working with that relationship manager is where I really sort of fell in love with property development and that side, because watching something grow and as it build, it's really exciting to see what's kind of happening and working with the developers on growing. So that's where I first sort of found my love of development finance. And then I sort of moved through the ranks as you do, as you grow your career, and then eventually becoming a relationship manager myself and focusing pretty much solely on development finance. And I did that. And then obviously we went through the 2008 recession, and that was the time for obviously a lot of us to kind of look and decide what we were going to do. And then when I sort of moved on, I came over and joined Shawbrook when they were a few months up and running. So I've been with Shawbrook now for 14 years, but I started with Shawbrook in credit. on their real estate side because they're very big at that time in doing property investment and doing bridging loans. And so I joined there, and that was a really good. Actually, it's really good to do the credit side along with doing, because I always come from being sort of the relationship manager, the origination side. Actually, to step back and put a credit hat on and see that side of the fence was really a good learning opportunity for me. And then, so I did that for a kind of few years. And then Shawbrook started doing sort of light and heavy refurb under their bridging products. And I thought this might be a good time to sort of pitch the idea of going all in doing development finance. And so I pitched it to them. And luckily, and I still thank them to this day, they decided to go with it and sort of said, right, go ahead and build it. So and so that's what I've been doing for the sort of nine, sort of hitting 10 years now, is building the development finance offering that we've got at Shawbrook. And Shawbrook have supported me on every journey of growth that we've gone on to do this and to be the lender that we are today. So I'm very grateful for them.
Amazing. And I don't want to sort of trip over my words here, but you must have had a really good relationship with that relationship manager for you then to want to progress and do that for yourself. You know, starting as the assistant and then obviously becoming a relationship manager yourself.
Yeah, I was very lucky. I had someone who really liked mentoring and coaching. And sometimes that can get a bit lost, especially when you've got sort of, a financial target on your shoulders. You kind of just about sort of get. But I was really lucky that the manager I worked with wanted to sort of saw that as part of their job to help me grow. And so they gave me a lot of opportunities to sort of write up and summarize deals myself, present to credit committees, go out and try and source new opportunities, was really supportive and let me kind of run a little mini portfolio when I was just the assistant. And he oversaw that and made sure kind of I was getting things right and giving me the support and coach. So I was very lucky in that early part of my career, because without that, I could have gone a different direction. But having that early support and mentoring was really probably what set me on the right path.
Great. And then you obviously had a brilliant experience working with Shawbrook in terms of the credit team. And in 2016, am I right in saying that you set up the development finance arm of the business?
Yeah, so in August 2016 is when we officially went live and started because obviously we got all the support. It takes a little bit of time to write the policy, design the products, and sort of recruit. I only recruited. There was four of us in the first round of recruiting when we sort of started in those first couple of months. And so we didn't do much in 2016, to be fair. I think we did probably maybe four loans, but we were just kind of like learning our way and just getting kind of everyone on board and speaking to the introducers, the brokers, and just starting to build, what we were sort of looking to do.
And what was it like dealing with those earlier deals? I mean, obviously you were sort of building the infrastructure around it and how to deal with those cases. How was that experience?
It was great because at the time you had myself and we had a couple of relationship managers, and we had an assistant relationship manager, but we basically all just rolled up our sleeves and just got involved in every part of the journey of what you needed to do to support a developer. And it was really fun. And developers actually, although we sort of, when we designed the product, we knew what we wanted to do, but obviously the market is constantly changing. And until you're sort of ready to kind of go to market, you don't sort of really engage with the potential clients and stuff, because obviously you don't have a product to really offer. But we found, especially in that first 18 months, sort of developers and brokers were always happy to sort of sit down with us and give us pointers and let us know where actually we might be a little bit off the mark, but where the sort of demands really might be, what developers might really want to need to help them do what they want to do. So it was really good to sort of get all that help and and support from the market as well. And in actual fact, that learning of reaching out to developers and reaching out to introducers who are kind of key in that sector has stayed with us year in, year out. So I'll often sort of ring up a couple of sort of brokers and ask to meet for a coffee and say, look, what are developers asking you for? How are we placed? What could we do to help? And we talk to our customers all the time. We have a really good set of repeat clients now, and we're always listening to them. And the reality is that you do have to listen to your clients and your introducers, because they're really at the front. We're at the front on the lending side, but they're at the front of knowing exactly what's really causing problems, what's making it difficult for them to secure sites or whatever it might be. And so really getting the feedback from them can really help keep changing, because you have to keep changing what you've got. You just can't decide one day this is what we're going to do, but then just keep it that way, because the market's forever changing and the needs are changing. And so listening to those people, we learned that very early on when we first started, actually, that listening to the market is the best thing you could do.
Yeah, I really relate to that. I feel like it's almost we've got sort of not similar journeys, but in terms of it was Shawbrook Development Finances was effectively a startup, and you
Mm.
created that. You were the founder of that startup within that business unit, and you've allowed the market to dictate in terms of from the feedback what way they want you to go in the
Yeah,
direction you want to, and that's
exactly that.
something we've tried to emulate with UK Homes Network is that what we started with 2 years ago is nothing compared to what we've now, and that's purely from people actually talking to us and telling us. Is there sort of key defining philosophies, or has there been a culture that's been built around that in terms of is there one sort of piece of feedback that a developer's given you that's sort of carved the way forward and what you still do to this day?
I wouldn't say it's definitely that. So for us, it's definitely a culture, and for Shawbrook as a whole, across all their products, is to listen to the market. That is
Yeah.
definitely a culture that we have at Shawbrook, which is great and it's really refreshing, because I've been at other organisations where they probably hadn't realised that as much to the same degree that Shawbrook has understood that. And so I wouldn't say there's been kind of one piece of advice, but I think probably the feedback that you get regularly and is to understand that not all sites are the same, not all situations are the same, and the schemes will often have problems along the way. And it's just making sure that if you're as a lender, if you're in the development market space, you've got to understand that while someone might say, look, it's going to take 12 months to build and 6 months to sell, and this is what it will be, and this is what the cost will be, and this is what the end values will be, to understand that, that is, it's not definitely going to run that way. And you've got to understand that there probably will be bumps in the road. And as long as the lenders, you understand that's the sector you're in, then you can work with the developer to help them through those bumps. And I think that's the biggest learning, and the learning for anyone getting into development finance as a lender, just to understand it's not what we say on day one of what we think how it's going to run often is not going to be what it's going to be like through the journey. There will be bumps, and you've got to be prepared for that and ready not to kind of react in sort of shock, but understand we knew something might happen. Let's work together and find a solution.
Great. And just on sort of the issues that property developers are facing, we're hearing a lot of noise. I mean, there was some stats banded around recently that, I'll probably butcher this, but there's like a couple of years ago, there was 12,000 sort of SME property developers in the country, and now that's down to 3,000. Are you seeing with the challenges that property developers are facing that's having a direct effect that you are seeing the market is shrinking in terms of the amount of developers that are out there?
Oh, I mean, 100%. I mean, a stat I saw a little while ago, and again, I haven't verified it in detail, but it was saying that in 2008, 40% of the homes built prior to 2008, 40% of the new homes that were built were done by SME developers.
Mm.
If you look at last year, the kind of the stat, I don't think the stats have been finalized yet, but it's somewhere between 10 to 15% of new homes were built by SME developers. So that market has definitely shrunk. And there's a combination. I think there's a combination of reasons as to why that's happened. Definitely difficulty of planning. Obviously, the rise in costs and interest rates, the price of land not really being able to make schemes work. A lot of people unfortunately have sort of been burnt by schemes, and have unfortunately lost their kind of equity that they would have used to go into a new scheme. So they're having to kind of sit back and rethink. So that market, it's not, I feel for developers because it's one of those sectors that is hit by so many different things, so many different regulations, and some of the regulations are all for the completely for the right reasons, but they're often, I don't think, very well thought through, and I don't know whether they're really engaged with developers to make sure you roll those out in the correct way. So developers get kind of hit sometimes from just feels like from all angles, and it makes it very difficult sometimes to make schemes work and look to do schemes. And so the only thing you can do is sort of pull back and step out or do less or whatever it might be. So it definitely the market is definitely shrinking, and and for us as SME lenders, because the bigger high street lenders are less interested in SME lenders. It's they're looking at the bigger stuff. So again, and that's one of the things we looked at Shawbrook when we first set up was to try and help the SME market. That's why we've never looked at doing the sort of the big players in the market. We feel the SME market is the space we want to be in, and where we feel needs the most support, and that's why we've always stuck to supporting the SME type lender. So they originally they had trouble trying to find lending first of all, but then luckily that sort of specialist challenger lenders started coming into the market, and were able to help with providing funding. But then, like say, just regulations, cost rises, planning difficulties, they've just been hit with everything. It does make it very difficult for a developer.
So you mentioned that the SMEs made up 40% of the house building that went on. And I was really interested when you said that you tend to stay away from some of the bigger ones. They go for the sort of high street lenders. Where do you see the SMEs fitting into the sort of ecosystem of house building in this country, and where do you see them most needed, particularly when we have such a housing crisis?
Yeah, I mean, I would say for again, it all kind of it sort of all depends. But I would say like where the SME lenders can be really strong is those that are looking at sort of smaller number of units. So 70 units or less, 50 units less, something around that sort of that's
Mhm.
one where you've got those sort of infills in towns and cities that a national builder wouldn't want to because it's too small for them.
Yeah.
Um, Filling in those um, more kind of sort of rural areas, brownfield sites, places like say where the national lenders tend not to, the national developers, sorry, tend not to go to. Um, it's the SME lenders I think are great, and we've got a load of customers that do this that can do a nice sort of scheme of maybe 10 houses in an already kind of rural area, and it just fits in really nicely with that, and they can kind of grow those housing needs in those kind of smaller bits. So that's kind of where I feel the SME lender is needed, and it can really thrive in those kind of little areas there where, like I say, they don't have to worry about the national house builders challenging them.
Okay. So if I was going to make you Prime Minister for the day, and I'm going to give you an executive order, which they do in the States, if you had the ability to remove one sort of systematic blocker of SME property developers, what would you remove? What would you change straight away that would get house building flowing again?
Well, I would expect if you ask that question of anyone, I'm assuming they would all say the same answer, and that's planning.
Yeah.
And I'm guessing that's exactly what I would say. And not so much as in to try and make planning quicker. It's probably more about giving developers the certainty. Because in theory you could get planning approved between sort of 8 to 12 weeks, but the reality of it is, and again, if you look at certain stats that are around often stuff gets declined or doesn't it doesn't come back with an
Yeah.
outcome. So you have to kind of reapply, challenge, and so it never turns out to be the 8 weeks that everyone kind of hoped. So it's more about making developers know that it's you're definitely, if you put this through, it'll be 8 weeks. That's fine. Just the certainty of planning, and that we just don't have that, and so just everything takes longer and costs more for the developer. So if I could do one thing, it's to provide certainty in planning and stick to the timelines that that are currently out there.
Yeah, Mark and Alex are both agreeing with you in the chat, saying it's just too slow. Um, so, I mean, looking at sort of 2025's delivery, would you say that it's planning where most schemes are coming on stock?
Yeah, I would definitely say it's planning, and I think there's utilities that that's we've definitely seen that kind of slow down and cause some problems because again, and you'll see that it's just not knowing when they're when you can get connected, all that sort of stuff, and so it's I would say it's probably a combination of those two have been the sort of the key things that have slowed down where we've seen some schemes, and then you have got obviously the cost volatility, although that has stabilized somewhat, still not. I don't think anyone can still go in there with 100% certainty that if they're doing a build over 18 months that they can feel safe to know their costs, what they are today, are still going to be the same. And I think for last year, the other big factor was obviously the slower sales market. But again, that's where I think the SME developers, have a great opportunity because of where they can do infills and those sorts of games. They can build in what is a market that they can have some certainty on because they know that these are the type of houses that people want in this particular area. They're not doing massive big towers where you kind of you might struggle. So the sales market, and unfortunately we're still going into still a slow sales market, but for the right product in the right area, we are still seeing, GDVs being achieved and sales happening.
Yeah, it's so interesting you mentioned utilities there because we've had Ben and Louise on from BTS Property Consultancy that basically specialize in way leaves, easements, new connections, and the waiting times on just getting an answer back from the utilities companies is crazy.
Yeah,
But in terms of sort of one of the main topics, and we had Tony on from Help Build who specializes in we do a construction clinic every month. And we regularly talk about sort of build costs, and that seems to be a major factor within property development. And build costs at the moment, despite them sort of being on the rise for the last few years quite significantly, they do feel a lot flatter
yeah.
in terms of that they've sort of stabilized. But I was wondering, how should developers sort of present contingencies and within their procurement strategy so that the numbers stack up in terms of when a lender's looking at it?
Yeah, I think, I mean, like you say, it is flatter. There is still some, as always, a bit of, you know, where certain elements aren't stable when you look in the kind of steel and stuff. There's a lot of outside factors that developers and lenders we can't control in certain in certain materials. I think, and where we did see some people come unstuck was with clients that were buying packages but not signing up to the packages straight
Yeah.
away. So they'd be looked to sign them up later down the build as and when they needed them. And the problem that obviously happened is as the costs were rising, what they thought was going to be the cost, had a 15% increase when they actually came to sign it, and they weren't expecting that. And I think a lot of people have probably learned some lessons over that. So contingency, again, you definitely want to see people putting a contingency in. And like I say, it depends. Like I say, if you're not going to be signing up all to packages, you probably want a higher contingency. If you're doing a JCT contract, and where you've got everything kind of signed up on day one, still, as we learned over the last couple of years, you still can't guarantee that is what the costings that will happen, because we saw sadly a lot of contractors go under because they couldn't meet the requirements of the contract, and then you've got to bring someone else new and it's going to be more expensive. But you have an element of certainty, so you could probably look at a smaller contingency. The contingency is I think a really important sort of calculation for people to have it. So it's one thing as lenders we will always look at, and it's not just, I think what people should kind of consider is it's not just contingency on the build cost, but there's also contingency where if things take a little bit longer, because then you might need to have to extend your facility, there's interest costs that will rise. So having a contingency that kind of is there to look at all kind of aspects that might go wrong is really useful. And it's impossible to kind of say it should always be 5%, it should always be 10, it should always be 15. It's very different. For properties that are grade two listed, often, you need a bit more contingency on those because some of the works can cost you more. So it really very much is on a deal by deal basis, and to understand how the structure of the packaging of the costs and what you're looking to do. But it's one thing that lenders always do look for is what's the contingency, and can you talk us through kind of how you sort of come to that idea, that number?
Great. Brilliant. Thanks, Terry. That's a great answer. And valuation in terms of sort of the exit risk are pretty much front and center at the minds of developers at the moment. What evidence of demand or pre-marketing carries the most weight with your team?
It's hard. Valuation is probably one of the hardest things as a lender to look at, because you can get comparables and on land reg and see what properties sold for. But again, those were negotiated several months ago. Could be a completely different sort of climate by the time it's uploaded on on land reg, so you can see what a price a property sold for. You can obviously go on lots of platforms and look at what the asking price is for certain properties at the moment. It's it's one of those that is very difficult to truly kind of feel 100% comfortable for everyone. I think for the developers and for lenders. For us, it's really, I think the one thing that we really look for is how fluid is the market in a given area. So you can go on various websites, nethouseprices.com. There's various websites out there where you can see what's kind of sold. You can obviously see what is under offer. So that is, I think, one of the biggest leaders for us, is looking at seeing whether if a website is showing that there's 100 properties in that particular postcode that you're looking at, and 75 are sold subject to contract, then it gives you a good feel that actually there's a good demand in that area for the stock that you're looking to build. And I think for us, that's probably one of the big drivers in feeling whether it is going to be the right product for the right location and there's demand in that location. It's just understanding, is it quite an active market?
Yeah, 100%. So if your lender's doing your due diligence, you should be doing your due diligence on what the market's saying as well. On borrower quality, what behaviors separate the teams that completely clean, separate the teams completely cleanly from those that drift?
I think from our side and what we've seen is those that have a really tight control on the cash flow and the management of the site. You definitely notice those that are on site every day, checking and working with all their contractors, having close relationship with their contractors, and going around their sites regularly and seeing it, and making sure they're really tight on what the costs are and their ability to sort of source materials, and not just have one place to source materials, have other suppliers. So those who can go to multiple suppliers, they definitely stand out as ones that can deal with problems sooner when they arrive. I think those that are realistic in their programming, and it comes back to what I was saying earlier on, we all know that schemes often won't run on time or on budget, but those who are kind of realistic in what they're sort of looking at. So having a realistic kind of budget or programming is really key. I think probably the thing that really separates a good developer for us is the ones that we have a strong relationship with, because I know some people might see the lender as just a source of funding, but actually for us, we see developers as a key partner. We're not going to grow our business unless we can help them grow their business. And where it's worked really well for us, and again, not to harp on about this, but coming back to the fact that as a lender and development lender, we do understand that there will be problems. So we would much rather you pick up the phone to us and go, look, just to let you know, we've got a problem with this, and let's sit down and talk about it. And we found that works so much better than having to hear that there's a problem from the IMS, or that we've gone on site and we've noticed something. Those lenders who just pick up the phone and tell us that there's an issue, we have no problem with that. Let's come to a solution and let's help you work through it. And that helps less stress for the developer as well. If they know they've told the lender and we've come up with a solution, they don't have to worry that at some point the bank might find out there's a problem, or they might hope that the problem will fix itself later down the line. But what we did find is most of those problems just exasperated and got kind of worse. And but if we kind of talked about it from day one, we found a solution, and we will work with that lender again and again because we know that they will tell us that there's an issue. And I think that's been probably the strongest part for us.
Great. And in terms of the amount of people on this call, we've got quite a high percentage of them being property developers, and I imagine they'll all be sort of raising or lending money to do their developments over the next 12 months. I think it'd be really useful, Terry, if you could sort of explain the anatomy of what a yes looks like from a lender. So from first inquiry to credit sign off, and particularly, I think people would be really interested to know from your perspective what helps speed up that process, and what can slow it down so that they can make that process as frictionless as possible. I think purely just because time is money. So the
Yes,
faster
yeah,
that these developers can get a yes, the
yeah.
quicker they can get out on site.
Yeah, no. So we have two stages in our process normally. So we have kind of what we call a heads of terms or indicative offer, whatever it might be, and that's kind of there to give developers the sort of an idea on kind of what we would look to lend and what the pricing is, so they can have a bit of certainty and understanding what the gearing would be, how much it's going to cost them, so they know then how much equity they would have to put in. And developers normally come to us quite early on, even sometimes before they've purchased the site, so they can understand how that might look. And so with at that stage, we can normally come back within a couple of hours, and we only need high level information. We just kind of need, where's it located, what is it you're thinking of building, whether it be 3-bed houses, whatever it might be. How many of them are you looking to buy? What you think your costs are going to be. It doesn't have to be exact or detailed. And what do you think the end values are going to be? How long is it going to take you to build? And how long do you think it will take you to sell? Off the back of that, we can be very quick to take a look at it and give you an idea of that's how much we would lend if those are the numbers, and this is where our pricing would be. Obviously, all subject at that point to credit approval. We'd still and a more detailed suite of information. So that if someone needs a quick kind of feel, we can do that very quickly in a couple of hours, and that's all we need. Very high level, basic information. We don't need a full CV on you or details of your asset and liability statement. We can just come back to you very quickly on sort of an idea of what it would look like. To go to the credit approval, which is obviously the big one, to know that you've got more confidence in the funding being provided. Where it works well for us and quickly for us is having a full suite of information on day one. So it saves us having to kind of go back and forth, and the developer, or if they're using a broker, the broker going back and forth. So having a full suite of information, which would include at that point sort of CV telling us sort of what you've done before, would have sort of asset and liability statement, would have some plans of the build, would have more of a breakdown of the build costs, a summary on kind of what you're thinking of the sales in the market, who your potential buyers are going to be, is it young professionals, what it might be. So if we can get a full suite on day one, then we can move very quickly. Because the next stage for us would be to come out. We'd always want to come and meet you. We'd always want to come and see your site. We love it when you sort of walk us around, explain what you're looking to do, tell us about your business, tell us about you, because we're a very relationship-led lender. So it's not a tick box lending behind a screen. So we like to come out and meet and say hello. And we obviously it's a two-way street. So it is, we have to sell ourselves to developers as well, and it gives us that opportunity to talk through and explain, who we are, what we do, and how we can help. It's never a one-way relationship. So a good strong pack, and then to get the yes is when we're looking at it for that, is the professional team that you're using, a good credible professional team, that if you've worked with them before, that's great, and you can sort of talk us through how they've helped you. Again, developers being open about problems that they've had on previous deals. We love to hear that. We love to hear that, there was the last scheme you did had an issue on this, but this is how we solved it. That is really strong for us, because it really shows the confidence in the developer telling us where there's problems and also telling us how they fixed it. That gives us a lot of confidence in the developer, that they're sort of very upfront, very honest, and they're kind of sharing with you where they have seen issues and how they solve issues, because that's kind of what you want. And then sensitivity on the actual sort of the numbers, because as a lender and all lenders, we will all do that anyway. We'll all be sort of saying, well, if build costs went up by 10%, what does that look like? If sales went down by 15%, what does that look like? What does it look like if you put them both together? What would it look like if you had to extend it for another 6 months with the interest? How does that all kind of impact? Having a customer who already does that gives you a lot of really good confidence that they've looked at worst case scenarios and how it would look and how they would have to get out. And then I think finally, where possible, and it isn't possible in all schemes, sort of an outline of sort of what is your other exit option. So for some developers, it will be obviously we're building to sell. Others will be building to hold to rent. But in the worst case scenario, and you can't get a sale or you're not getting the tenants take up, what's your sort of backup plan? So a summary on what the backup plan might be. It would be great to have. And if you had all of those, that will get you to a yes, very quickly.
Great, Terry. I'm predicting in the next 3 months you're going to have a wave of applications come in via brokers or via property developers direct, and they're all going to be perfectly filled out applications. And you're going to go, do you know what? They've come from UK Homes Network members. That's
That'd be great. That'd be great.
100%. Guys, we're going to go to your questions shortly. So if you do have any questions, please do put them in the chat. I can see one come in already. Please do make sure you get your questions over to us. Terry would love to answer them, and we love to keep these sessions as interactive as possible. So if you do have a burning question, please do make sure that you get that in the chat. So Terry, how do you think about leverage, like cost to complete and interest provisions in today's market? And if you compare that sort of with two years ago.
Yeah, I mean that's interesting because you would kind of think that given what's happened over the last couple of years, we would probably maybe have pulled back on our gearing appetite because we've seen obviously cost rise, interest rise, and uh, but um, but strangely enough, we've actually kind of we normally sit on average sort of at 65% of GDV, 85% of total costs, kind of usually whichever is the low when we're running those numbers. However, more recently, over the sort of the last year or so, we've actually been pushing that boundary. So we can do a bit higher than that. And the reason why is because again, over the last couple of years where we have seen problems, um, we've had a lot of developers, like I say, talk us through their problems, work with us on finding solutions. We've seen what schemes have worked really well in what has been a difficult market. And we have realized actually that rather than sort of pull back on gearing to try and be a bit safer as a lender, there's opportunity where we could push that gearing a little bit more for the right scheme, for the right developer. So we actually have been pushing that a little bit more. So gearing is obviously is really important. And there's only so far any of us can go when where it would get a bit too kind of scary for us to be out too high in the gearing level. But there are, with every sort of difficult market or a downturn in market, there always are learnings that you can take from that. And it comes back to what I was saying earlier on about listening to the market and learning and not just staying sort of stagnant in what we do. Like I say, we do constantly look to change. So gearing is important, but ultimately it is an important factor as to the potential that the developer and the lender might lose money. But as a lender, while the gearing is important, it does come down to the relationship you have with the developer and whether they have built the right scheme and where there's a problem, they can help work with you on that problem. So whether it might be that they inject a bit of extra gearing, or they might be able to provide some extra support and security, or whatever it might be, to come up with for both partners to come up with a package that helps, deal with the problem. So gearing is important, but actually it's the relationship with the developer that I think is more key and is more linked to success for both partners going forward.
Great. And the title of this webinar was Funding £2 billion worth of property developments. And your amazing colleague Georgia sent me over that stat, and it blew my mind in terms of the amount of projects that you've been funding recently. Could you give us some insight into that in terms of the kind of projects that you've funded and maybe give us some lessons in terms of sort of what developers can take away from it. So in terms of like risks to avoid, and maybe is there sort of a common theme of opportunities that people have found through the um for the amount that you've lent?
Yeah, I mean, um, so we've supported about over sort of 10,000 units being built since we've started, and so it's been great. And like I say, we went past the 2 billion of lending, and at this point, I just would like to say that is a big shout out to the team. It's all really good that I'm here today on the call talking about it, but it's actually the team that have been the people that have really driven the business and built the relationships with our clients and our brokers. So I should take the opportunity to thank the team, because it's not me that's kind of done that. It's the team that have been amazing. And for anyone who doesn't kind of know about Shawbrook, we do the whole of the UK. So we're up as far as Scotland. So we have the development finance team as a whole is over 50 people, and like I say, we're across the whole of the UK. So we have offices across the UK. So it's very thankful to the team. Without that team, we would have never surpassed the 2 billion and done it all. So that's not down to me. I just want to shout that out. That is down to the team, and I'm very grateful for them and their continued support in growing the business. I think for us, the big where we've seen like really successes, and the successes work with where you sort of vice versa to sort of where things haven't worked so well, is schemes that have more than just one viable exit. So where there are opportunities to, if you are sort of halfway through a build and the market is going against you for whatever the reason might be, like say it might be a slow sales market, the ability to maybe hold it and rent it for a while. Where you've got those, we've seen developers sort of manage those kind of the storms that have happened over recent years by just sort of changing the market they've gone for and adapting. So I think the ability to be able to adapt is really useful. Now it can't be done with all types of schemes, because some just might not work out. But definitely, if you've got a scheme where you can adapt it to what's happening in the market, that has worked really well. I think well located schemes where you've got them in good infrastructures, where there's it's not, you're not just looking at maybe a smaller market, like sort of let's say the prime residential market, for example. While there would be buyers for maybe these 5 million, 10 million pound properties, it is a smaller market. So those schemes where there's a wider market, they've definitely weathered storms a lot better. Having kind of energy efficient housing, that obviously it's very popular. That has been, again, we've seen properties where the energy efficiency is really good. We've seen that probably a more demand from the buyer than not so. And again, I think that's because it's been talked about for quite a few years now, and I think the buyer market has now become quite alive to the fact of energy efficient homes. And so now that they are asking those questions when sort of going around seeing properties, and they'd like to hear where the energy efficiency is going to save them cost and their bills. So those kind of those skills, those sort of sectors, sorry, have been really useful. So I'd say that's kind of been where we've seen people weather the storms in those kind of areas.
That's great insight. Thank you, Terry. I think a lot of people will really appreciate that, and I can see the questions coming in thick and fast from people on the call. So we're going to get to the questions now, if that's all right with you, Terry.
Yeah, of course.
And
Yeah.
I hope you don't mind me sharing this, but guys, if you could absolutely share the love in the platform for Terry and for Shawbrook. Terry's battled on with toothache tonight, and he's absolutely smashed it out the park for us. So if you could go over to UK Homes Network and post how much you've enjoyed tonight's webinar. I'm sure Terry would love to see those messages afterwards. So we're going to go to our first message from Pauline, which is, how does it work with newer developers on smaller builds?
Um, I think it means within the sort of the approval, the credit process, that kind of side of things. Actually, there's one thing we're looking at supporting more this year going forward, and it is the newer developers. So perhaps maybe they're a contractor and they've been doing work for other people, and they want to start getting into that market themselves. So we have a very big appetite this year to support the newer developers come into the market, because it comes back to the comment we were saying earlier on. about the SME market shrinking. We want to try and find a way to stop that happening and to try and get it to grow again. And we do feel one of the ways to do that is to work with newer developers coming to the market. Historically, is what we would have looked to have done is, you would have wanted to have a couple of years examples of doing that sort of work. So, but we've adapted for this year now, and that is a key focus on us to grow the market. So for again, it's not where we're looking at new developers coming to the market. Smaller schemes is the great way to do that. We wouldn't really want to see someone coming in and doing a very big scheme that that they didn't have any experience on. But if they've key for any new player coming to the market is the team you have behind you. So it's like I say, if you've been a contractor, then that's great because you can then evidence that you've built similar schemes. That's perfect. But then you want to kind of see as well, who are you sort of lining up to sell your units for you or rent your units? Who are you partnering up with doing that? Because a contractor might not have the experience of doing sales before. So and it's the same with who you're working with to help you sort of design what you're going to build in that particular area. So it's about sort of understanding the professional people you're going to be working with or that you have worked with to help get your planning or design what you're going to build. But and as long as you can talk us through that, then it all works in the very same way. Like I say, we've got a very good appetite for working with newer developers coming to the market.
Great. And AJ's asked a similar question, actually, and given a bit of context around his experience. So, confidence gained by being around property builders and property developers for a long time, although not having done a development myself, although being a landlord for 20 years with many refurb jobs, does this weigh up well with you as a lender for a new development?
Yeah, I was going to say, yeah. I mean, if you've been a landlord for a number of years, you would have quite a good bit of experience in having to sort of refurb and tidy up. And at Shawbrook, we have a very big real estate division that deal with we landlords and investors, and so and their sort of light and heavy refurb product is very much aimed at those landlords looking to freshen up their properties. So yeah, I mean that for us would be a great example of someone who's got good property experience, and for that side, that they would really meet the end sort of who's going to be their end user or end buyer. They'd have that experience, which is great. And then again, it just comes down to who's the contractor you're going to be working with, and perhaps the firms that you've been working with that are doing your refurbs also have the CV to be able to do the bills. Perfect, because you've got experience of working with them. They know how you work, you know how they work. That would work really well for us, and that is someone we would see as having good experience in some key areas of it. And if they're looking to get into development ground up on their own or whatever it might be, then yeah, they're people we'd like to talk to.
Great stuff. Mark's just submitted a question. Planning or agreement in principle, which comes first? We are coming up against a lender, not you, uh, said they want to see planning before making an offer, but we don't want to pay out for planning if it's a no. Does that make sense?
Yeah, so I think I understand what they're saying there. So for us, we will give you a credit approval prior to you having planning. We will do it prior to getting evaluation and prior to getting an IMS. Key for us is that we don't want anyone incurring any costs without the developer having at least an element of certainty that us as a lender, we like the location, we like the idea of what you're going to build, we like you as a developer. We want to give the developers that confidence, and then it will just come down to well, what planning finally did get approved. So our credit approval would be subject to, but you'd have a credit approval, but it would be subject to what finally got approved at planning, and then obviously evaluation and a monitoring surveyor reports coming out. But we would give you the confidence before you incurred costs of
Great.
what our appetite would be.
And before I go to final questions, just to let you know, guys, we do have our webinar next week with Nisha Patel, who is from the Care Property Hub. And we have the week after that, we've got Ryan Taylor joining us from the compliance company. So please do make sure you tune in for those. And of course, it's only 10 days away from UK Homes Network Live in Birmingham. So I hope you will make sure you get your tickets and we will see you there. So just to our final questions Terry, do you need a personal guarantee with borrowing every time?
So it is our preference to look at a personal guarantee, and for us, it kind of shows sort of buy-in from the developer that they believe in the sort of scheme that they're putting forward. So we do normally look for it. There are occasions where we wouldn't take a personal guarantee, but then that comes down to sort of looking at the whole risk of a deal. So, like for example, if and it's all done. You'd have to look at the whole deal in full to really make a decision. But where we've seen kind of our ability to either reduce we normally look at a 25% personal guarantee. We can look at corporate guarantees, just so everyone knows. Where we've seen that the ability to reduce it, or even in circumstances waive it, is where the borrower hasn't required a high gearing level. So that obviously, so it's been sort of sub 50%. Where we've seen that there is already a buyer exchanged, ready to take the site once it's done, so that our exit risk is lower. So where we've been able to mitigate some of the key risks that you have in a scheme, and we've been able to mitigate them on day one, then we can look to either reduce the PG or in some cases waive it. But in general, we do like to take a PG and get that commitment from the developer that it shows that they believe in their scheme, that they're looking to build.
Great stuff. And Terry, before we go to our final question, where can people find you if they want to reach out to you or any of the team after tonight's webinar?
Yeah, so on our website, shawbrook.co.uk, there's our page on there, and it shows the team and where they're located. So by all means, you can reach out to us via there. To make it easy, more than happy for you to come direct to me, and and I can, if it's a regional where the opportunity is, I will link in with one of my team that's there, and they can obviously talk to you more specifically about that scheme. But I'm happy to talk about any kind of general views, or sort of you want a bit of feedback on what you're kind of looking to do, where I think we would be happy to have any conversations. So you can get us from the website. Obviously, I'm London based, but like I say, we've got the team across the whole of the UK. So we're always happy to meet face to face. If anyone wants to just go for a coffee and have a chat, we're always up for that. There's a group of us that are going out to MIPIM in March. So if anyone is on the call is going out to MIPIM and wants to meet up for a coffee, by all means, ping me an email, and we'll happily kind of meet up and have a catch up over a coffee or a spot of lunch.
Absolutely. Yeah, guys, if you're going out to Mippin, please do meet with Shawbrook. I think you guys are running an event out there as well. So, yeah, definitely reach out to the Shawbrook team regarding that. So, Terry, we'll do our final question, then we'll wrap it up for the evening. I'm currently struggling to consider a bridging loan to increase GDV of a property I'm pursuing by 300,000 plus, wanting to convert into a basement into a half bed flat. Downside is paying out for drawings, then delays with planning. Is what I'm seeing a block for me to pursue purchase? What would you suggest? It's such a good deal to let pass on.
Oh, that's a tough one. So the issue there is the delay in doing the bridging and doing the drawdowns. Am I understanding that question correct?
Yeah, so I think it's another similar question regarding they're wanting to convert into a basement and a half bed flat. The downside is paying out for the drawings, then delays with planning. Um, this is what I'm seeing as a block for me to pursue the purchase.
Yeah, so I mean, I think depending on what the asset is at the moment, which I'm assuming it's a residential property, you could obviously put it on a bridge and hold fire on doing anything until obviously you've got the planning. There are some lenders like ourselves on our real estate side that could look to do a heavy refurb product rather than a full development finance product. And with the refurb product, again, depending on it, on the structure and what would need to be funded, often they don't do drawdown schedules. So they might be able to do it in a way where actually you inject less money in on day one, and you can use that money towards your refurbing, and it doesn't have to be done in stage drawing. So obviously that saves you a kind of a cost and a delay with sort of getting your stage drawings. It is an interesting one. I would probably suggest if that particular person wants to reach out to me directly, I'd be more than happy to kind of have a bit more of a talk to understand the situation a bit better. And then it might be an opportunity that our real estate team, our bridging real estate team, could help with.
Yeah, absolutely. Pauline, please do reach out to the team. Obviously,
Yes, Pauline, thank you.
Shawbrook have got quite a lot of their real estate team now in UK Homes Network and quite active in there. So there are plenty of resources around you and support available if you need it. Terry, thank you so much for this evening. I really do appreciate your time and you sharing your knowledge and insights with us. It's been fantastic, and I hope everyone will reach out to Shawbrook at some stage when they're considering their next development. But yeah, Terry, thank you very much.
No, Chris, thanks for having me, and thanks everyone who kind of logged on late evening on a Monday. I really appreciate that. It's been great to get your questions, and I wish it could have been a bit longer. I think there's a lot more you can talk about. So always happy to do another one if there's kind of general questions that people would like to talk about. Chris, always happy to jump on again and do another one. But please do just email me and for anyone who's listening, and I'll be more than happy to kind of try and help with anything that you've got.
Yeah, you took the words right out of my mouth, Terry. We've only scratched the surface with this
Mm.
one, so it won't be long before we get you back. I'll reach out to the team and see when we can get you booked in next, because I think there's quite a lot of people that want to come back and put some more questions in. So yeah, we'd absolutely love to have you back very shortly.
Oh, wonderful. Well, look, thanks everyone. I really appreciate the time.
All right, take care, everyone.
Take
Have a good
care.
evening.